On today's hot sheet, I'm discussing Bill Pulte's pivot, portable mortgages, FSBO home sales at a historic low, and cash-rich buyers propping up the luxury market. Today is Thursday, November 13, 2025. I am Byron Lazine, and the hot sheet starts now. Live from Connecticut. Bobby, love the hot sheet new hot sheet background here today.
Yes.
Yeah. Welcome into the hot sheet live from Connecticut here in the Connecticut studio. There, look at Bobby making a quick adjustment. This is the hot sheet. This is the only 24-hour look back on the housing market and how the macro economy impacts it for real estate professionals on the internet every single Monday through Thursday that the markets are open. Let's roll. Let me know where you're tuning in from, wherever you may be. It's a pleasure to be with you here today, and it's a pleasure to see the government has stopped their little hissy fit. They are no longer fighting over a government shutdown. In fact, yesterday, Trump signed into this bill, or signed this bill that ended the government shutdown. It was the longest U.S. government shutdown in history, and signed a funding bill passed through both chambers of Congress. It had to go through the House yesterday, which it did, with 222 members saying yay and 209 saying nay. So not an overall consensus there, kind of a partisan vote. There was a couple on each side that went against their party. Federal workers, though, have been told to report back to their jobs on Thursday, today. And so now it comes down to back pay. Bobby, could I see what's going on the screen here so I have a little confidence that things are happening? Appreciate that, Bobby. Let's give it up for Bobby in the throw a Bobby in the chat. All right. I feel like he's almost now wishing Haley was sitting in the chair today.
No, never.
So government's back in order. Seems like there's a ticking time bomb. This, CR is real. This funding bill really goes until the end of January. So yeah, we'll get through the holidays, with a lot of holiday cheer. But the end of January, I'm sure these politicians are just going to jam each other up again. We could be right back into another shutdown in February, literally. So we'll see what happens when we get there. I'm sure there's going to be a whole bunch of other hyperbolic conversations that our politicians are having between now and then. Speaking of our political landscape, Bill Pulte continuing to put out political products. That's what I'm calling these, because they have very little chance of happening. Okay, Bill Pulte, now yesterday, after all the 50-year mortgage headlines on that political campaign, that 50-year mortgage is nothing more than a political campaign, essentially, puts out another headline yesterday. Bill Pulte teases out portable mortgages. Okay, the 50-year loan obviously faced backlash. Tweeted out yesterday, we're actively evaluating portable mortgages. Portable mortgages is what it sounds like, taking a mortgage and bringing it somewhere else. Okay, if we're gonna just think about this here, you got portable mortgages being floated out, as well as assumable mortgages. Assumable mortgages have been on many minds since interest rates went up over 3 years ago. If we're just gonna kind of break this down for a third grader, okay, an assumable mortgage is a mortgage that stays with the house. So the buyer gets a little package deal, right? They're getting house and mortgage. It's attractive when you have interest rates that have been locked in between 2.5 and say 3.75%. Okay, if I get house and percentage, I might actually be willing to pay more for that house. I might be willing to extend my offer because it's such an attractive deal with the interest rates. So what would that do to affordability? I think your mind can figure that one out. As opposed to the portable deal here, you've got a house no mortgage. And in fact, the mortgage that's on this property is exiting stage right. I think they usually stay stage left, but in this case, I'm drawing to the right. So I'm going to say stage right. It's getting the hell off of the stage, the mortgage, and it's going with the seller to a new house. Okay. So seller is going to take that with them. Buyer comes in, just the house, new interest rate, nothing changes for the buyer here. So that's the difference between the two. You've got a mortgage that is leaving the property on this portable, going with that potential seller, which potentially the idea here is that the portable mortgage is going to create more inventory, because if I take my mortgage with me, if I can roll with it, then I'll put my house on the market now, because I'm taking my, what some would argue, my even bigger asset than the house, my 3% 30-year fixed mortgage. I'm taking that with me on the new house. Here's where things get kind of a little bit tricky. And basically, it's never going to happen. Portable mortgages right now, while it would be nice to move that mortgage with you in a perfect world. I mean, Bobby said, gee, I'd love to take my mortgage with me, right? If I had the low mortgage, I would take that with me. Most mortgages right now, so most of these 3% mortgages locked in during the pandemic, have guidelines inside of them that say you can't do a portable mortgage. It's written into the deal. Okay. So portable mortgages right now are not possible. And so even if you got a law change, which is essentially what you would need, okay, you would need the laws change to do portable mortgages, to allow a homeowner to transfer an existing loan and the interest rate to a new property. Even if the legal hurdle, okay, right now, U.S. mortgage design loans are secured to the property, not the borrower. So lenders would need a legal mechanism, okay, to lift and modify the note and apply it to a new home. Even if that happened, the current loans that are written right now state in all that paperwork a borrower signs that this loan is not portable. So even if the law changed for the future, which would really mean nothing because nobody's going to go portable on a 6.3% loan, even if it got changed for the future, you think lenders are going to come back and say, oh, Bobby, if that noise can stop in my ear, that'd be great. You think lenders are going to come back and say, oh, let's go and like amend all these loans that we have out there so that you can take it with you instead of us writing you a new loan? Not in a million years is a lender going to say, oh yeah, let me free this up and make your life easy on you. Bobby, are you okay? Yeah, okay. Well, thank you for putting your hand in the air. That's just never going to happen. Okay. So it's an advantage for the buyer, but it's not an advantage for the bank to go and switch their administrative guidelines, like, or their loan documents right now, rather. So, I don't see portable mortgages even being worth the conversation, to be quite honest, because even if that gets passed into law, they're not going to go back in time and make portable mortgages is a thing. The biggest roadblock I see with portable mortgages, says the CEO of Absolute Home Mortgage, is they're secured to the actual property's collateral. So if you remove the loan from the property, it's not secured to anything. What are you going to all of a sudden make that loan personally guaranteed? How do you lift and modify a note to another property? I don't believe there's an actual vehicle or mechanism that would be within the director's power or ability to make a mortgage fully portable. We have a mechanism for that now. It's called paying off your current mortgage and applying for a new one. And of course, that's what the mortgage industry wants. Yeah, pay it off, give us our capital, and go apply for a new one. We'll rerun new fees. Again, this is um, an administration that knows affordability is the top of so many minds, and it's a FHA director throwing some headlines against the wall, seeing how people react, what sticks, um, without having a clear, concise plan on even how, like, a tweet. We're looking into portable mortgages. Okay. I'm looking into buying a jet. Okay. I'm sick of flying commercial back and forth between Connecticut and Florida. I'm looking into buying a jet. I can't afford one. I have no plan on how to get one. I've got no mechanism on being able how to do it, but I'm looking into it. So these are headlines that create a lot of conversation like we're having right now, and it's not going to happen. Now let's look at the assumable mortgage, okay? Because this should make more sense, and this is something that has been done in the past, an assumable mortgage, okay? Assumable mortgage is the buyer comes in and it allows the qualified new buyer to take over the seller's existing loan. That loan is already, um, you know, uh, with the home. And so it keeps the same interest rate, the remaining balance. They come in and, whatever that sale price is, they cover the rest through cash. Okay. So there are current loans today that permit this, that permit assumptions. It's FHA, Federal Housing Administration loans, VA loans, and USDA loans as well, as some conventional arms also do this. But buyers must undergo standard underwriting. There's no appraisal that's required, but they still have to go through the process of being able to qualify for that loan that they are assuming. Services can charge a processing fee capped at $1,800. Okay. Now, this is up from $900 in 2024, but they can charge this $1,800 servicing fee. It's an administrative workload that servicers of the loan are doing when somebody wants to assume a loan. So they're not making all the fees of origination. Okay, I'm already servicing this loan. Now you've just created more work to service the loan, and I have a processing fee that is capped at $1,800 in order to do this work. I can't negotiate what my service fee is going to be for to basically service the assumption. So experts note that the actual cost can reach $10,000 per loan when they start to add in additional costs to that. So here's the thing, though. Even though this exists today, only a fraction of applications for assumptions are approved. Only a fraction. So there's a cost and there's risk factors. And there's also just that, like, do the banks really want to do assumptions? No, they want to write new loans. Same thing we were talking about with portal. I'm not saying that that's right. I'm just saying the incentive for the bank to take on this extra work, they make it a miserable experience, which is why only a fraction go forward. Either the borrower says, enough with this, I'll just go get my own new loan, or the bank just doesn't even approve it. The loan servicer, it becomes a headache. So obviously it's an appeal to a buyer. Hey, I want the house in the 3%. Probably willing to pay more, which I question how an assumable loan helps affordability, because they're still purchasing that house. It's attractive to get 3% versus 6.5%. Would you pay more for the house? Yeah. So what does that do? It pushes up comps. I think long term, it probably makes homes a little bit more expensive. Okay. I think if you're a buyer and you can get an assumable mortgage at 3%, you should do it. It's a home run. It's a winning formula for you. Overall for the market, probably doesn't do much for prices or affordability. Naturally, people will live up and even beyond their means, and they'll start to bubble up those prices. So, all right, some of the critics on both sides of this, the portable and the assumption, they say, hey, doing these is going to reduce new originations, adding strain to the struggling lending industry. Okay, consumers are not going to feel bad, and the general public that's really focused on affordability is not going to feel bad for a struggling lending industry. I'm sorry. They don't feel bad for the real estate industry overall that has a reduced transaction count. They just don't care. They want affordability, and affordability at any cost. So that's not an argument against what Bill Pulte is trying to propose here. It's not a good argument. Supporters argue that portability could immediately free up trillions of dollars in sub 5% loans for potential buyers. Now, if we come to high fives next year on the 30-year fix, I think this becomes just less relevant because the gap between the average, which is up over 4% right now, and what the average, current rate would be next year would start to get smaller, and you don't have as strong of a need as you've had, the last 3+ years. A little late in the game if rates actually do go down into the fives, which is why the best thing you can do for affordability over the next 12 months is get rates lower. It's trying to create all of these different products. It all comes down to just get the rates closer to the mid fives, and you're going to open up this flow of transactions that you're talking about in some of these unique products. Okay. Bill McKay, chief advocacy officer at the Broker Action Coalition, goes to say, while details are limited, yeah, they sure are. I mean, these are just tweets. Making conventional mortgages portable would likely reduce originations, further strain. The idea may sound appealing, how low rates were in the past. Existing loans can be rewritten to make them this is the thing that I was talking about earlier. Existing loans cannot be rewritten to make them portable. So it would not provide immediate relief anyway. So you're going to make 6.3% loans portable? Nobody wants to take those anywhere. Okay. Just going to buy a house with it. So you can't rewrite the past. These terms already live in the documents as the current law sits anyways. Okay. Bob Simpson, CEO of Daylight AML. They require administrative work and coordination. With the stroke of a pen, trillions of dollars, sub 5% loans would be on the market and available to buyers. They acquire administrative work and administration from who? The loan providers, which is they're just not going to be, raising their hand to do this. Okay. So, and it can cost upwards of $10,000 to get the thing done. Okay. There you go. My quick thoughts on portable and assumable. Good headline, good political headline, another political headline, not a reality. Certainly on portable. Assumable exists today. Hard to do. There's a high cost to it, and banks are just not incentivized to make the process easier. Now, I guess if you could change law to force them to do that, that's a whole nother thing, and maybe there's an opportunity there. I still think long term it probably pushes up comps in that area where loans are getting assumed. If those loans are available to the open market when it's like marketed that way, house and 3% loan, you better believe that now becomes a more valuable asset to a buyer and pushes that price up, which pushes comps up. Okay, we're going to continue on here, digging into NAR's 2025 profile of buyers and sellers. So here's the big headline out of this as it relates to for sale by owners. I remember, last summer of 24, boy, real estate industry better watch out. Everybody's going to be a DIYer when it comes to the real estate business. The reality is for sale by owner home sales are down to a record low 5%. Okay. People want to list with professionals. They don't want to list and do the work themselves. This is the smallest share of for sale by owner FSBOs transactions ever recorded. Smallest share. So I know we've had low transactions, but share of low transactions is small. Okay. It's a sharp contrast to the 91% of sellers who worked with an agent. It's just not happening. We've got the highest level of people working with an agent, the lowest number of people, go figure, doing for sale by owner. In the early 80s, for sale by owners accounted for as much as 21% of home sales. Early 80s. I'd argue it was harder to do a for sale by owner back then. Much harder. You didn't have the internet. Okay. Now that share has dropped steadily over time, landing at just 5% in 2025. And it also highlights the fact that as much as Americans like to complain about everything, they also like service, high levels of service, things that they can contract out of their lives, pay somebody else to do. Okay. So I've got some charts here. They're all uploaded into School. You can grab those. BAMX members, grab those in the hot sheet classroom on School, of course. And let's dig into some of these here. This is maybe useful when speaking to for sale by owners. How for sale by owner determined asking price of a sold home. They look at the recent homes sold in the area. I was having this conversation actually with my parents just the other day. I said, hey, you guys live in a community where there's a lot of inventory and just like 2 or 3 floor plans. Like, price is not a mystery. Okay. Like, I'm just looking on the internet right now and I can see these comps. It's not a huge mystery. Now, positioning price, there's strategy involved in that and whatnot, but price isn't a mystery. Recent sold home in the area, so for sale by owners are like, okay, that's not that hard. 41% use an appraisal, 16% online home evaluation tool. Those can get tricky, kind of digging through what data you get back from them. Profit, the seller needed from the sale. Well, I want this much money, so if I listed this minus that, I'll get I'll get Y. Agent presentation, who seller did not use the home to sell. Attending open houses in the area. A lot of secret shoppers go to open houses or secret sellers, and they do that as well. So for sale by owner, most important reasons for going as a for sale by owner: sold it to a relative, friend, or neighbor, 30%. Okay. Those deals, 30% of the small collection of for sale by owners, they're not going to the market anyways. They're selling to a neighbor. They're selling to a relative. Hey, I'm probably, not worried about maximizing price. I'm worried about maximizing my family relationship, trying to take care of somebody. I get the paperwork drawn up and I move on from there. 28%, though, did not want to pay a commission or a fee. This is the 28% that usually end up costing themselves money by getting emotionally caught up on one number. Buyers contacted seller directly, 14%. Did not want to deal with an agent, just don't want to deal with a sales professional, 10% of the time. Okay. The method used by for sale by owners to market a home. Okay. 24% said, yep, we went with a yard sign. Okay. Friends or relatives or neighbors was the method to market. Hey, go tell your friends to tell their friends to tell their friends that I'm selling the house. 22%, friends, relatives, neighbors. That was the method of marketing. MLS, only 20%, only 1 out of 5 figured out, I can get on the MLS for probably $500, do an entry only. I tell every seller I've ever talked to, like, if the agents you're interviewing, their plan is to just go on the MLS and put a yard sign in, you can do that yourself for $500. Like, and if by the way, that's the marketing plan you want, you don't want maximum push, you don't want maximum eyeballs, then you should just go spend the $500 and let's save ourselves the time and I'll roll up out of here. Okay. Open house, 20%, 1 out of 5 thought it was a good idea to do an open house. Realtor.com, only 14% thought Realtor.com might be like the second biggest platform out there. Oh, I think maybe I'll try Realtor.com. Third party aggregated, 13%. Social media, only 9%. Virtual tours, 6%. A for sale by owner website, 5%. 40% just didn't actively market the home. 40% said, I'll just, theoretically sell the home on my own without letting anybody know the home is for sale. It's like you're applying to jobs without sending out a resume. Yeah. I'm looking for a job. I'm not going on job posting sites. I'm just waiting for something to come to me. Somebody should stumble across my LinkedIn and start making me offers. How for sale by owner sellers will sell their current home. For sale by owner knew the buyer 21% of the time, 35% didn't know the buyer. Use a real estate agent eventually to bring them the buyer, 29%. 18% FSBO didn't know the buyer in those agent use cases. Okay. Going to FSBO seller satisfaction. Okay. How are FSBOs satisfied? So when the seller knew the buyer, 89% very satisfied. When they didn't know the buyer, 80% were very satisfied. And then those numbers kind of just tail off from there. So interesting that there's such a low use case, but there is satisfaction, and satisfaction being the highest, obviously, when they knew that buyer, and when it's family or friends or something like that, that makes a lot of sense. For sale by owners, record low, 5%, speaks to the desire to be able to contract this work out to a professional. All right. Realtor.com reporting cash-rich buyers are propping up the luxury real estate market at scale. And the value right now is set to swell to more than $338 billion by 2030, according to this Realtor.com U.S. luxury market report. Luxury market right now valued at $289 billion, and it's projected to reach more than $338 billion by 2030, which is fueled by a 3.2% growth rate. All cash buyers, you hear that a lot in luxury. It's like, hey, I'm dealing with cash right now. I'm dealing with cash. I was talking to a developer yesterday, talking about $3 to $5 million price points. Like, man, I've just been hearing cash. From the customers who are on the ground floor in this particular development. $89 trillion generational wealth transfer from baby boomers to their heirs. And so this is expected to continue to grow. The luxury, definition, that starting point has continued to grow. The Southeast region is expected to post the fastest growth at a rate at 3.32% by 2030, driven by states like Florida and Georgia and Carolina, right? Florida and Carolinas have become have been an affordability haven, and now have become really expensive in a lot of those key areas. Okay. There's limited supply of exclusive properties in top zip codes. Okay. Top zip codes is not just a bunch of land laying around in the most desirable areas. There's rising demand for sustainable, climate resistant homes. And so you've got that. You also have, keep in mind here in this report, a great wealth transfer coming. The millionaire baby boomers are projected to transfer $89 trillion to their heirs in the coming decades. UBS Global Wealth Report 2024 estimated that Americans with over $1 million in investable assets hold a combined $83.5 trillion in wealth. And it's going to unlock a new buyer class, heirs in their 40s, looking for trophy homes with technology, sustainability, and lifestyle features. States like Wyoming and Florida attract these buyers due to favorable estate planning laws and tax advantages. Okay. There you go. There's your little bit of a luxury report from Realtor.com. Looking at today, as we move into this Thursday here, just exactly now 2 weeks from Thanksgiving, Bobby, 4.10 on 10-year Treasury here on first day of government reopening. This is relatively low in comparison to where we started 3 months ago. It's on the high side of the last 30 days. 4.1 is all the momentum loss leading up to the last Fed cut. 6.29 was the reading after taking a day off on mortgage readings for Veterans Day on Tuesday. 6.29 is where we came in on Wednesday. First day here of the government back, and the uncertainty is bubbling back up of whether there'll be a cut in December. Obviously, with the government being back open, we may get some data between now and the December 9th meeting for the Fed, but this number has dropped from 72% yesterday to now 56% chance that there is going to be a 25 basis point cut on Poly Market, 41% chance that there will be no change according to Poly Market. So just a touch better than a coin flip here, that you're going to see a cut in December per Poly Market. And we'll see if we can get some of this government data between now that we've been lacking, obviously, with the government shutdown between now and December 9th. If we go over to CME Group to just see if the Poly Market numbers match what they're saying, and yeah, it does. 53% chance of a cut, while 46% chance that the rate is going to stay as is, and at the current rate of 3.754. So there you go on kind of the outlook here on day one of government reopening. That's your hot sheet, not only for today, but for the week. We do this every Monday through Thursday when the markets are open. If you want to be part of the conversation that's happening every Tuesday before the hot sheet, jump into BAMX. It's the community that'll help you close more deals. Every single Tuesday, we do a live role play mastermind, myself, Tom Toole, and Lisa Chinati. Our next one being Tuesday, 9 a.m. Eastern, right before the hot sheet. Jump into the role play mastermind where we talk about not only the scripting, but the conversations that matter today, the relevant conversations and touch points to help you close more deals. Go to school.com/BAMX, and you can try it out for the next 7 days and be part of that conversation on Tuesday. We have a new Knowledge Brokers podcast up, separate channel tomorrow. New walkthrough today here on the main channel, new walkthrough today. And there you go. Until next time, I will see you then. And of course, toodaloo.